So gold has been on this just an absolutely historic tear, right? It's been smashing records, leaving investors feeling pretty thrilled, but also, a little bit on edge. And the big question on everyone's mind is this: is this a new permanent high? Or are we standing on a summit just before a really steep drop? So what's really going on here? Let's get into it.
Yeah, and this quote just captures the whole dilemma perfectly. On one hand, you've got this incredible headline-grabbing number. But on the other, you have this really serious warning that's rooted in decades of market history. It's this tension, this tug-of-war between celebration and caution that we're going to unpack right now.
Because look, it doesn't matter if you're a long-time gold bug, someone who's always believed in the metal, or if you're just watching from the sidelines, understanding what could happen next is absolutely essential. So let's get you prepared.
Okay, first things first. We need to put this surge into perspective. This isn't just another rally. No, it's the speed of the climb that is even the most seasoned market watchers sitting up and paying very close attention. And there it is, the headline number. For the very first time, the price of a single ounce of gold soared past $4,000. I mean, that's a psychological barrier that just got completely shattered. It's a milestone that has totally changed the conversation around gold.
Now here's where it gets really wild. Check out the velocity of this thing. Think about it. It took 15 long years for gold to double from $1,000 or $2,000. But this last $1,000 leap, it happened in just 207 days. That's just a staggering acceleration. So what's the fuel for this fire? Well, it's kind of like the perfect storm. You've got central banks, especially in places like China and the other BRICS nations, buying up gold like there's no tomorrow. Then you mix in all the geopolitical drama happening around the world, a weaker US dollar, and those nagging fears about inflation, and boom, you've got yourself a gold rush.
Okay, so that was the exhilarating climb, the fun part. But, and this is a big but, now we have to look at what's on the other side of the mountain. Because as exciting as this all is, history has some very clear and pretty sobering warnings for us. And this right here, this is a concept that every single investor needs to burn into their brain. Yes, over the long haul, gold is a safe haven. But in the short to medium term, it is absolutely not immune to big price drops, especially after a rocket ship ride like the one we've just witnessed.
And this chart just tells the whole story, doesn't it? I mean, look at the pattern. After those massive peaks back in the 1980s, and then again in 2011, what happened? In both cases, a euphoric rise to a new record was followed by a sharp and painful decline. You know that old saying, history doesn't repeat, but it often rhymes? Well, this is one of those rhymes you really want to listen to. Okay, so if a fall could be coming, what would actually cause it? What are the tripwires we need to be watching out for? It really all boils down to a potential shift in the very conditions that have been so perfect for gold lately.
I like to think of it this way. Gold has its best friends, and it has its worst enemies. On the left, you've got its buddies, the things we just talked about that help it soar. But on the right, you have its foes, a strengthening US dollar, rising bond yields, and the Federal Reserve hiking interest rates. Any of those can be like kryptonite for the gold market. So let's get practical. How can we turn all this knowledge into an actual early warning system? Something you can use to keep an eye on the market for signs that things might be about to change. Think of this as your personal dashboard with 3 key dials. First, bond yields. When yields on safe government bonds go up, investors can get a guaranteed return. Gold doesn't pay you anything just to hold it, so all of a sudden it's got serious competition. Second dial, the US dollar. If the dollar gets stronger, gold automatically gets more expensive for buyers around the world, and that can really hurt demand. And the third dial, investor sentiment. Just watch where the money is flowing. If you see cash pouring out of safe havens and into risk-on assets like tech stocks, that can be a huge sign that the flight to safety is over. All right, we've covered the wild surge, we've listened to the warnings from history, and we know the signals to watch for. So, the million-dollar question, what does this all mean for your portfolio right now? Let's break it down. Here's the bottom line. Gold's role as a hedge against uncertainty, that hasn't changed one bit. But trying to perfectly time the top of the market to sell at the absolute peak, that's a fool's game. It's almost impossible. And that's why having a diversified portfolio is and always will be king. The goal isn't to be a psychic. It's to use what you know about these signals to prepare and protect your portfolio no matter what happens next. And this quote just absolutely nails it. That feeling of euphoria when you hit a new record high, that is the exact moment an investor should be the most vigilant.
This isn't about panicking. It's about being proactive. It's about being prepared. And that's the question I'll leave you with. As you look at the market, as you look at your own strategy, are you just relaxing and enjoying the ride? Or are you actively preparing for a potential shift? The answer you come up with, well, it could make all the difference.